All right. Make sure we're good to go. Looks like we are. And all righty. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic. We made it our mission to help you guys own it. And guys, the stock market is trash right now. God damn, is it frustrating, but not surprising. Okay. I'm going to give you some explanations as to why I'm not surprised. We saw this coming. I mean, what did you think the market was going to do once we found out that Omicron was going to enter the U.S.? And of course, it was going to. Did anybody really think it wasn't? We're going to get into that in just a few moments. However, first order of business, the starting five. Let me welcome in Zane Khan, Jeff Ponica, John Gasson, Jeff Chocolate, Sean Ethier, Savvy Money Show. Guys, you are starting five. That might have been six. I didn't even count, but nevertheless. Welcome to Own the Chaos, guys. Shane Haley, yeah, see you, bro. Says my account's getting slaughtered. Everybody's is. Mine is, in particular. But that's okay. I'm going to continue to just stay the course because this seems like it's a bit ridiculous. So, yes, let me just paint the picture here real quick. The stock market was having a pretty decent bounce back today. And actually, I wanted to share with you what I put in the watch list for our Chaos Crew members. So every morning before the market opens, I put out a watch list for our Chaos Crew members, which, by the way, you can go find that at ownthechaos.com. It's absolutely free to sign up. If you guys want to go check that out, certainly would love having you guys there. It helps support the channel and the studio you see behind you. But I mentioned in every watch list, I put kind of like a general broad perspective of what I think is going on in the market at the moment. And then I put in here this morning, I said, futures are super green this morning, and even oil is making a big rebound. Yesterday's action was pretty horrific, though. So this doesn't come as much of a surprise, meaning maybe this is a bit of a dead cat bounce. Who knows? I said, I think this is appropriate to be optimistic here, but with caution. The chart for the SPY doesn't look as though the correction is over just yet. Okay, let me repeat that. The chart for the SPY doesn't look like it's through the correction. And I could see this coming back down to test the 50-day average at around 452. Right now, we're sitting at 453. So celebrate the rally if it sticks, but have a plan just in case it doesn't. And if you weren't prepared for that, then you probably didn't read the watch list this morning or you don't get it. So, like I said, make sure that you're clicking down in the link of description below at ownthechaos.com if you guys want to get in on that watch list. And yeah, so right now I'm looking at the SPY and it is not pretty. It started off great. And it is not doing well right now. So let me go ahead and share my screen with you guys and kind of give you an idea where we're at. So, I mentioned, like I said in the watch list, the SPY coming down to 452, which is the 52-day average. So or 50-day average, sorry. This is the S&P 500 ETF, if you guys aren't familiar. But looking at this, we've seen this potentially coming back down to maybe bottom. I think the bottom could potentially be in today. On a stark overreaction of Omicron, the transformer. I'm just going to keep calling it that. The transformer variant, COVID variant, has reached the U.S. So, the Dow Jones was up as much as 520 points today, and now it's down, I think, around 300, if I'm not mistaken. Let me just kind of give that a little bit of a refresh. Let me see where we're at as far as that's concerned. Almost not quite. So 236 points. So it's down almost another percentage. The S&P came down and now down 0.5%. NASDAQ's down over 1%. And oil actually ended up closing red after having a pretty monstrous bounce back. To me, we talked a little bit about this yesterday, right? About how, some of this stuff seems a bit overblown. And we talked about how yesterday the big driver for the sell-off was the Fed talking about, for the first time, I think in 18 months, we heard Uncle Jay be a bit hawkish in his comments to Congress, which is a little bit of a shock to the system for a lot of people because he's been so dovish up to this point. So that was one of the main drivers for the markets to come down yesterday. Omicron has kind of been hanging over everybody's head since Friday. And it was only a matter of if, not when, it ended up reaching the U.S. And I kind of expected this move. Once we found out that this move that Omicron was going to hit the U.S., I figured we were going to see a bit of a sell-off. It's just frustrating just to kind of see it. Obviously, I'm with you guys. I was up as much as 10% today in the entire account. Now I'm down around 8-9%. It's not great. It does not feel good. But here's the thing. I'm not changing anything. I'm not deviating from what I'm doing. This is what really doesn't make any sense to me, and that's the VIX. If you guys, the volatility index, some people call it the fear index. It is going crazy today. We're seeing volatility index go up to levels that we haven't seen since the first wave of the pandemic, since COVID actually became a thing. And let me go ahead and zoom out here so you guys can kind of see what I'm talking about. So if we come out here um, to look at where the volatility index is, which is right around 2950. Now remember, I said I would really like it to remain below 30. When I talked about this yesterday, I said the volatility index remains below 30. I think we're going to be in good shape. If it does not, I think we could be in for a little bit more of a bumpy ride. So I'm still standing behind my bullish sentiment. I still think that the Santa Claus rally is still very much intact. This is what I don't understand though. Look, these levels are at levels that we haven't seen really since the pandemic started. And I would argue that we're pretty much in endemic stages right now. Like we're not dealing with a pandemic anymore. We're dealing with pockets of variants and waves and that sort of thing. The Delta variant is still kind of wreaking havoc in the U.S., but it's not as bad as it was, and it's here and then gone. Within about 45 days is the peak of where where we've seen increases in COVID cases as far as Delta is concerned. It's there for about 45 days and it leaves. And now we got the first Omicron case in the US. And so far, now this is still very preliminary. This is still very fluid. So a lot of things can change. And maybe this is why there's a lot of uncertainty in the market right now, because we all know the market does not like uncertainty. And but really so far we're seeing that the Omicron, while it's pretty aggressive as far as transmission is concerned, the symptoms are mild. I don't think, and somebody correct me if I'm wrong, I haven't seen it yet, that nobody's been hospitalized with this variant. So I think this is something, in my opinion, that is very overblown, and I think should be bought up. I think buying the dip here still makes sense. But as I had mentioned between Monday, yesterday, and today, now I'm saying it again, I don't know if we're necessarily at the bottom, but I think we're pretty darn close. And we're actually starting to see the SPY bounce a little bit right now, heading into the end of the day. It was down as low as it did actually end up touching 452. Let me bring it up here intraday. 453.15 was the low of the day for the SPY. And so I think 454.42 is where we're at right now. This could potentially be the bottom, but listen, don't be surprised if we continue to see a little chop towards the end of the week. And I think heading in the next week may be a little bit brighter for us. And like I said, there's just so much good going on right now that we're not going to. This isn't, in my opinion, a lot can change. In my opinion, I don't think this is something that we need to be as worried about as when COVID first got here. That just doesn't make any sense. Each wave that's come through the U.S. And really other areas of the world has been weaker and weaker and weaker. And this, to me, seems like it's entirely overblown and something that I personally don't think is anything that anybody needs to worry about from an economic standpoint. Should we be concerned about it? Sure, especially for those of you who are immunocompromised or what have you. So from a personal standpoint, maybe you should worry about it a little bit, but just cause for concern, not cause for a freak out. And that's what's going on right now. Everybody's freaking out. So in my opinion, I don't think that there's anything that we need to be worrying about as far as the stock market's concerned, as far as the economy is concerned. We're not going to be seeing lockdowns again. That's just not happening, right? We're not going to see anything that we saw back, during COVID when it first got here, which, if we look at the VIX, it's reacting as if COVID's starting all over again, and it's just not. So in my opinion, I think that we just continue to stay the course. I'm not deviating from anything that I'm doing. I'm not changing anything. I'm certainly not selling anything. I still think it's the worst possible time to do that, because don't want to be chasing things back. I'm not going to try to sit here and time the market. And I'm looking at the SPY, and we're starting to see this maybe bounce back even further. It's coming back up to 455 maybe. So that's kind of my sentiment on that. I mean, I just don't see how this sticks. So what do you do now? I'm just looking at SPY just cross back up over 455. We could have seen the bottom here today. Interesting. Don Franz from the Don Franz show. He might be coming in here today. Says everyone panic, and you can store your shares in my account. I'll hold them so they don't get lost. Yeah, I mean, I think that this is a time where I would imagine that you would be aggressively buying here if you have cash on the sidelines, which there still is a lot of. So Santa Claus rally is still very much in contact, still very much intact, in my opinion. You just have to endure a little bit of the pain, I think. And that's what I'm doing. Not going to deviate from anything. I mean, I'm still seeing some of my stuff that's green, but I'm looking at Amazon, and that's ridiculously low. I mean, we're looking at PayPal. That's down, 30-40% from its highs. Marathon oil's now down quite a bit as well. And I mean, I'm looking at Salesforce. That's down 11.5% after reporting a ridiculous quarter again, by the way. So I think that's definitely one to look forward to. And Ford is still up 3% on the day, even though it's not off of its highs. But I mean, some of this stuff just seems like it is just way, way undervalued at this point. I'm looking at MGM. Let's take a look at some of this stuff. So I'm looking at MGM, for example. Great reopening play. This was on the watch list this morning. If you guys want to check this out, I put this on the watch list as well. It's a perfect reopening play. You look at the PE on this, it's very, very low. And I just, perfect reopening play. Like I said, sports betting is still very much a thing here. And Wynn Resorts, another one that has just gotten decimated, not given the credit that it's due. Down 5% today. Down 5%. We're looking at this being down. I mean, from its highs, it's down a ton. But even just in recent months, let's just go back to September. It's down 30% from its September highs. Like, that's just crazy to me. So these are all going to be really good opportunities. And Boeing as well. Boeing, I think, is 30-40% off of its 52-week high. So this just, to me, seems like really good opportunities, guys. Boeing at its 52-week high was at 278. It's sitting at 190 right now. 190. And actually coming down on support. This is a support that I've had marked for a long time. I must have had it marked for some reason. I haven't even looked at Boeing's chart in a minute, but I just noticed that I just happened to notice the price of it as I was just kind of sifting through some things. But this is actually looking like it might be a good solid buy here at 190 as well. It's just crazy to me. It's just crazy. You look at Meta Platforms. Is it now Meta or is it still Facebook? Oh, it's still Facebook. It's December. Is it December 6th that it changes to Meta? But either way, this is ridiculous too. 313. Are you kidding me? KVCPR. Yeah. Ask about Square. Square's another one. Yeah, of course. Square. This thing is down 5% today. Makes no sense. And here's the other thing about some of these. It's very interesting too. Some of the COVID stocks that did really well aren't doing so hot right now. I mean, Square and PayPal did phenomenal, and Amazon was a phenomenal player during COVID, during the height of the pandemic. So again, if we go back and look at the VIX and try to gauge, why can't we just go to the stuff that did really well over the pandemic, given the VIX being the way that it is? No, and I think that there's like this huge disconnect with a lot of things that are going on right now between this panic over the variant and what's actually going on. So for me, I think this is just seriously overblown. I don't think that there's anything you should be doing, in my opinion. I'll just explain to you what I'm doing, and that is absolutely nothing. Looking for areas of opportunity to buy, perhaps maybe adding to little things here and there, but I'm just sitting on my hands, not doing jack shit. And actually, look at this. I mean, Square's down below 200, which is laughable at this point, but you can see this 200 area actually acted as a pretty decent support for Square. So you can look at this. around 197, 196. How many times did this bounce off of here? This went all the way up from way back in December of last year, exactly a year ago. Was that 200? You telling me that Square is less valuable now than it was a year ago? I don't think so. And this bounced from 197 area to 243, and then it came back down to that same area, and then bounced all the way back up to 286. And it's done this repeatedly and going all the way up to the 290 area. So I think, in my opinion, you look at something like Square, it definitely looks like a pretty solid grab. And there's so much stuff on sale today that it's almost impossible to go over it all. But I'm telling you, I think the big key here, in my opinion, is to go after stocks that aren't losing money, meaning that they're not reporting for a loss every quarter, and don't have a crazy high multiple. And if it does have a high multiple, make sure that they are making money. And I'm looking at things, and big cap tech, large cap tech is definitely the first thing that I would go towards. Microsoft, Amazon, Apple, Facebook, Meta platforms, whatever, big tech certainly is that. And don't discount. I mean, I know that we've seen the semis go crazy, but the semiconductors are still on fire. I don't know if there's any putting that out either. I mean, AMD is down 4.5%. But I mean, look at this. The chart still looks ridiculous here, and I think that there's still lots of room for these to run. AMD is about ready to cross over Intel's market cap, so just craziness. I think there's just a lot on sale, and I think that if you guys are part of the crew, hopefully you already know what to do because you have heeded a lot of the things that we were saying. But man, this just seems really, really crazy to me to see the moves that this stuff is making. I think, like I said, getting in stuff that isn't losing money, that doesn't have a crazy high multiple. Also moving into things like the financials and energy is still going to be the play. I know that that's another really great opportunity. I mean, what WTI crude came down 30% from its highs this year. It's down 30%. Actually ended up being red again today. At the end of the day, it's not going away. People think that like all of a sudden, like the people are just going to hide back into their homes, hide back into their holes. They're not going to go travel for Christmas. They're not going to go travel for Hanukkah. By the way, Hanukkah just started. So happy Hanukkah to those who are of the Jewish faith. Going to visit family for the holidays, that's still going to be a thing. Nobody's shutting down here, at least in the US. That ain't happening. And you know, maybe there's a few restrictions here and there, but it isn't going to be anything that phases anybody, I don't think. So I went on a pretty long rant, but I'd love to hear what you guys are doing. Are you worried? Are you in the same boat as I am? Do you think that, this is a temporary drop off and all-time highs are still very much in the equation? I think so. I think the all-time highs in the S&P still here. Still on the table, and we'll hear from Don Fran hopefully when he gets home. He's on his way there. He's gonna hop in here, but he mentioned here was hoping to get one more solid holiday off. We better stay home. I don't want to get anyone sick. Yeah, no kidding. Looks like Savvy Money Show did end up playing the downside here a little bit. He said, I sold my last SQQQ with profits. Thoughts on UK version of SPY. Okay. Yeah. I mean, just going to let it ride, says Philip Stroh. Like it. I like Jeff. I like what Jeff said here. So Jeff Chocolate says, I'm mad because people are emotional, but it is what it is. Bought a teeny bit of Boeing, Roblox, and Marathon. I think those are all solid pickups. But yeah, I think that, I'm in the same boat. Am I worried about what's going on? No. Am I emotional about the positions that I'm in? No. But am I irritated about how the market's reacting to this? Yes. It makes no sense. So I think that you're allowed to be upset or angry or whatever about, at the market. You can shout at it all you want. But as long as you don't act on it, I think that's the big key, right? I've had a lot of comments, a lot of people on Twitter. Go check me out at Only Chaos, commenting and being like, I think I'm just going to sell it all. I think that's not the appropriate way to go about doing it. If you want to vent, that's cool. and just kind of be angry at the reactions here. I think that's fine. But make sure that you already have a plan. You already had a plan in place, and we've talked about this at length within our Chaos Crew, which, by the way, if you want to go check that out, the link's in the description at ownthechaos.com. Every morning, we kind of give a snapshot of what we think the market's going to do, how it's going to react, and give you 5 stocks to watch for that day and maybe a little bit beyond that. So if you guys want to go check that out and get the watch list for free, amongst all kinds of other goodies, go to ownthechaos.com. Love to have you guys over there. Go check it out. Kevin Atkins says Square's at a great price. Yeah, absolutely agree. Absolutely agree. Listen, we also got earnings today, by the way. Amongst all this craziness, we do have earnings. CrowdStrike, we're going to be giving our reaction to CrowdStrike earnings today. And there's a few other ones out there. May or may not interest you. We'll of course, bring those about if you guys are interested in those. But Snowflake, actually, we'll talk about Snowflake too. Snowflake, Okta, C3 AI, meh. Splunk, meh. And some other ones that if you guys are curious about, we can certainly bring them up. But CrowdStrike and Snowflake are probably the big ones that are reporting today. And so I think that's going to be something that we watch for. The market closes in about 7 minutes. So once it closes, we'll certainly give our attention to that. Just to give you an update on where we're at, how the market's reacting. Are we seeing a decent bounce or what? It doesn't look like it. It looks like things are actually kind of accelerating. The Dow is down almost 300 points now. We're down, which is good for 0.86%. The S&P is down 29 points, 0.64%. NASDAQ's down almost 200 points now, 195, which is good for 1.25% down in the red. Oil sitting at $65 a barrel. This is the oil price is a joke. It really is. Oil prices are a joke right now. I mean, do investors really think that demand is going to slow up? I just don't. I don't know where their head's at. I really don't. We got OPEC meeting tomorrow. About ready to give the rest of the world the middle finger about increasing production. and honestly, this gives OPEC the Omicron variant gives OPEC the perfect out, right? Gives them the perfect out to be like, why do we need to increase production when this new variant's out? I would be very surprised if they end up caving to the U.S. demands as well as some others as far as increasing oil output, especially with the feeble attempts that they made as far as like releasing some of the reserves from the SPR and that sort of thing. I think the OPEC Plus is just going to give everybody a middle finger and say, you know what, it's going to be business as usual, but folks. I think it's exactly what it's going to be. But let me know your thoughts on that too. Mark, I can never pronounce your name right, Mark. So I'm just going to say Mark says, I'm really hesitant to buy anything because technically a lot of stocks could go much lower when looking at their PE, but some just look too cheap right now. I think you're right. I think that has to be some context though. There's some stuff that has a high PE, but some that don't. And we can look at those, but give me some examples of what you're thinking. I was thinking about selling a part of Penn National. I don't know if that's a good idea. And getting into the Fisher sports betting ETF and MGM. I think it's great. Honestly, I should have read the rest of the comment there. So let me just bring that up so everybody can see it. That Mark brought up. So think about selling some of his Penn and getting into MGM. I don't think there's anything wrong with that. I just don't know, MGM's probably the better one to hold at this point, and I'm a holder of Penn, but I would say that MGM's probably the better hold. Are you going to be better off selling Penn right now to go into MGM? Maybe, but I think it might end up being six and one half dozen the other. So, but good thoughts. I don't think there's anything there that I would say it's a stupid move or anything like that, but it just kind of doesn't seem like you're going to really benefit too much from making that kind of move if you're down on Penn National just to get into MGM, because I think they're both oversold. They're both going to come back up. But I do, like I said, I think that MGM is probably the better hold. I think even Wynn Resorts has a lot of potential to it. There's just so much that's being discounted and looked over with Wynn Resorts, MGM, and really that whole industry as a whole. It just makes no sense. I mean, look at this too. I mean, I'm looking at Dick's Sporting Goods. You want to take a look here? Here's a perfect example. Something that is oversold and undervalued is Dick's Sporting Goods, and they make money. Right? Remember I was talking about this earlier. Oversold, undervalued, and they make money. This is Dick's Sporting Goods. Now coming down to a potential support here around 113. This is sitting at 114.76. You guys know that I have calls in Dick's Sporting Goods, and they had a monster quarter when they reported their third quarter earnings and gave a great outlook for the fourth quarter and beyond. Looking at Dick's, so I mean, we look at their PE. It's now down at 7.8 is their forward PE. That is insane. That's insane. And I know that I might be a little bit biased because I do own Dick's, but I love me some Dick's. And you can't argue. I don't think you can argue why Dick's isn't a good value here. Why? Because it's gone up a bunch this year. I mean, fundamentally, it's still cheap, dirt cheap. James, just checking in with some of you guys that are responding to what I was asking about. What are you getting yourselves into? James says, I got a starter in Square and add to PayPal and Fiverr. I think the better play probably would have been like just to pick one, Square or PayPal. But obviously, I mean, I think both of those are fine. Fiverr is an interesting one because this is one, like I was mentioning, they're not making money. At least last I checked. I don't know what they reported on their last earnings, but I don't think that they're operating in the black yet. I think they're still taking on losses each quarter. So this one might be one that actually ends up suffering a little bit as a result of, yeah, look at that PE. Holy shit. Is that really the true PE of Fiverr? 586 times forward PE. Is that really true? Or is Weeble drunk? Somebody corroborate that with me. But yeah, this is one that I think that I certainly will be concerned about as far as Fiverr's concerned. I don't know. Maybe it's reached a bottom here, 130, but whew, that's kind of an example of what I would actually be staying away from. Not to say that you should, but me personally, probably not going to chase something like that. Snowflake. Let's talk about some of the stuff that's reporting earnings today. So we have Snowflake that's down 8.5%. Prime example of something that has a high PE and isn't making any money. But it's got a lot of institutional money behind it. But you can see how volatile this has been. I mean, it got all the way up to $400 a share and then sold off. Now sitting at 311. So this is down, 25-30% from its highs just 2 weeks ago. I mean, that's insane. Not even 2 weeks, about a week and a half. So this will be interesting to see how this reacts towards earnings. And then we have CrowdStrike, obviously, just a monster cybersecurity company. Palo Alto reported a couple of weeks ago and had a monster quarter. I would imagine that CrowdStrike actually ends up doing even better. But we'll see. We'll see how this shakes out. So both of these have earnings. CrowdStrike's earnings per share, their expected earnings per share, let's take a look at that. I have that pulled up. Is 10 cents. Estimated at 10 cents per share is their earnings. And then revenue is expected to come in at $363.53 million. So around $364 million is what they're looking for in revenue. Obviously, we also want to look to see how their outlook is and all that good stuff. But those are the preliminary numbers for CrowdStrike. Snowflake, I can pull that up real quick. Snowflake, I don't know what their expected earnings per share are, but we can pull that up. They're going to be the two big ones to watch as we head into the close. Looks like a loss of 6 cents is what the estimates are for Snowflake. Revenue is $305 million. 305 and a half, to be exact, is the numbers for Snowflake. So we'll take a look at here. And the market is officially closed. Um, just to give you the final day's numbers, the S&P closed down 54 points at 451.12. So 451.12.91. Which means the SPY closed at 450.54. It actually plunged right below that 52, closed below the 50-day moving average. So that'll be interesting to see how tomorrow shakes out. The Dow closed down 462 points. So the selling accelerated going right into the close. What a rough day, down 1.34%. The NASDAQ closed down 283 points, good for 1.8% in the red. What an ugly last few minutes of the day. Whew. But let's check in and see how we're doing on some of this other stuff here. So, like I said, we have earnings today. I'm looking at Snowflake, which right now is up around 1% after hours. Let's go to the 1 minute chart just to kind of see how things are moving. And as those earnings come in, I'll certainly be giving you those numbers. Feel free to put them in the chat too if you guys got them. But I got my eye on Snowflake right now, as it looks like that one's moving on a little bit here after hours. One moment here. I'll get that pulled up. As soon as I have them, you'll have them. Nothing yet on Snowflake. And next I'll pull up CrowdStrike. CrowdStrike is, we might have something here on Snowflake. Let me zoom in here so you guys can see the price action on Snow right now. So you can see right now Snow is up 2.46% and climbing here. Okay. Man, what a move here. Now Snowflake is up 5% here after hours. Really big move. Just checking in on CrowdStrike real quick as I'm waiting on some of the numbers to come in there. No real action on Snowflake just yet. Yeah, Shock City Rocker. Yeah, no kidding. Rob T, right now, he says in the chat, says, been out of the loop all day. What's happening in the market? The first Omicron case entered into the U.S., found in California. So the market's reacting to that, which I think is kind of a load of BS. We've talked about that all, but that's essentially what's going on here. Google interview comments 160 watching, 40 likes. Please hit that like button. I like that. Appreciate the comments. So yeah, guys, if you won't mind hitting that thumbs up, if you're enjoying the show so far, the stream, hit that thumbs up. Should easily be at 100 likes. Easily. I know my Chaos faithful will come through. Hit that thumbs up, guys. I certainly would appreciate it. So checking in right now. Snowflake jumped bigly. Haven't heard that term in a while, huh? Jumped up big, 5% right out of the gate, and is selling back down here now, only up around 2.5%. Still no numbers on those earnings just yet, but it's certainly acting like we got some numbers in. Maybe we don't. We'll see. Checking in on CrowdStrike too. If you guys are just tuning in, we went over a little bit about what's going on in the market right now and kind of like my reaction and where I see things headed. And all that good stuff. So make sure you go back and watch if you missed it. But right now we're giving our reaction to earnings with CrowdStrike and Snowflake. If you guys do have other earnings you want me to take a look at, I'll certainly look at that as well. But these are the two big ones I think today that mostly everybody's watching. So we'll continue to keep an eye on that. Now CrowdStrike is getting some interesting moves here as well. Looks like I saw a really big spike here up at 212. This is another one that's a perfect example of a stock that actually makes money. It does have a high multiple, but look how much this has come down. We're talking 30+% for CrowdStrike from its highs just a few weeks ago. This is a perfect example of something that I would be in on. This is crazy to me. So it is up now 3.7%. Looks like those numbers might be in. Snowflake is now up 6%. Open the door for Don. He's knocking. I gave him the link. I gave Don the link. He should be able to hop in here at any point. All right, so let's go back to the 1 minute chart. Huge move here on Snowflake. Is now up 12, 13% and counting. I can't even keep up with it right now. Let's take a look, see if we can get those numbers in. Big move on that. Big move on CrowdStrike too. Not quite as much, but big move nevertheless. Let me pull this up. I think we do have the numbers in here. Revenue 312 million. So the expectation there was around 305, if you guys recall, representing 110% year-over-year growth. That is big. Remaining performance obligations of 1.81 billion, representing 94% year-over-year growth. Huge there. Don't have earnings per share just yet, but revenue beat big time on that. Big revenue beat for Snowflake. So the growth story remains here. As soon as I have earnings per share, I'll give it to you. Look at that. It's up $40 a share right now. It's up 13.5% after hours. What a huge beat for Snowflake. Amazing. Unbelievable move here. Don't have earnings per share just yet on this, but they came in and crushed revenue expectations. 345 million to 350. Their estimated fourth quarter product revenue of 345 to 350, estimated 317 was that. So they also crushed expectations. Now the stock is up 17.25%, still rocking and rolling here. Guys, I will get to CrowdStrike in just a second, but Snowflake is having the boner candle of all boner candles here. 15 minutes into their earnings release and is now up 17.25%. Unbelievable. It's still early, so as soon as I have those earnings per share, I'll give those to you guys. Check my phone. It says Don of the Don Fran Show. That's interesting. Okay, Don. I should be able to join anyway, but I don't know. Let me give it another shot. I'll send you one more. One more invite, Don. Just a second, folks. Let's see if that makes a difference. I think that should be good. All right. Oh, here we go. Now he's on.
That should be good.
Yep. There he is. What's up, Don?
What's up, guys? Hang on, I gotta make sure we're not doing a bunch of audio. Are we good?
Yeah.
Okay, I can do it. Yeah, the first link didn't work because you're live. This one opens up as a guest. So
okay. Okay, cool. So just tuning in, Don of the Don Fran Show, go ahead and check him out. He's one of our sister channels, but Don, Snowflake is up 13%. Brother channel, whatever you want to call it.
Okay, I'm kidding.
But anyway, it's up 13% right now.
Yeah, it's rocking. Hey, go down. Sorry, I got a little one right behind me.
That's okay.
I'm mad. I actually wanted to play Snow long.
Yeah.
But today was just a colossal waste of time.
Today was very frustrating.
I didn't short. Like typically today's like I'm rocking. These days are awesome. But I wasted my time looking for a dip. But then the sellers never stopped. And then by the time I just looked at it, I was like, I shouldn't have just went short. This is ridiculous.
Here's the crazy part about Snowflake though. So revenue came in and they crushed revenue. And I think that's why it's moving up, because of the growth story here. So revenue came in, like I said, 335 million, estimated 305. Their earnings per share is a loss of 51 cents compared to 6. They're expected to lose 6 cents per share and actually ended up losing 5 times that. It's just crazy. Crazy loss per share. So it's pretty wild to see this actually still up here.
Yeah. I'll be interested to see if it actually closes above the 350 mark.
You mean closes the after hours trading above 350?
Yeah.
Pretty wild here. Pretty wild move. So that's that. So if you guys were interested in Snowflake, they ended up crushing revenue. Their outlook, I think, is what really has investors buying this up right now. Their outlook actually was increased significantly as well, 345 million to 350 million for the fourth quarter, which is much higher than what the street was expecting, around 317. So I think that's probably what's encouraging a lot of the buying here. But their loss per share was significant. I mean, that's an abysmal miss as far as loss per share is concerned. Moving on to CrowdStrike. CrowdStrike's up 5% here after hours, and this is one that's been beaten down too, down 30% from its highs just from a few weeks ago, probably only about 2 weeks ago. Right now, they beat revenue 380 million. Their expectation was 363. Their earnings per share 17 cents, and they beat their estimates that were around 10 cents, as I mentioned earlier in the show. So, really solid beat for them. They did raise their guidance as well. The expected guidance was around 16 cents per share. They raised that guidance 19 to 20 cents per share, and the revenue they also raised for the fourth quarter 406 to 412 million versus 400 was the expected. So CrowdStrike beat across the board, top and bottom line, and also their guidance they raised, which is above the street estimate. So CrowdStrike is up here. It was up as much as 5%, now only up around 2.68.
Yeah, just needs to hold. What I don't like is these things just earnings season across the board. This last season was just a lot of
It's been rough.
get that move, and then need to move after, and you got pre-market. It's like almost like three moves.
Yeah. I mean, and we've seen some really amazing beats that ended up, creating a lot of sell-offs as well. I mean, just a prime example of that is Salesforce. And I mean, Salesforce came in and said that their growth wasn't going to be as much as the street was expecting. But it was still like a ridiculous beat, and the guidance that they gave was still really good. But it still sold off 12% anyway, which is just crazy. The slightest misses on anything has just brought upon like these crazy beat downs. The stocks just get punished.
Yeah, just get merged.
Yeah.
Right. Oh no, someone just said, "Oh my 3,000 shares short on snow." Like we said, they're still all tomorrow morning.
Yeah. Not going to be a good Christmas for you.
The interesting, I put my screen if you did want to share it.
Okay, yeah, sure. Let me pull it up here.
Short. This is what I meant by I'll be interested to see if it actually closes above 350 after hours.
There you go.
Is that right there? We held it, made that lower high, just blasted right through it today. Coming back up to check it. So I'm curious how many sellers are actually still there or above that.
And this is Snowflake, right?
Yeah.
The stock right now is still up around 11.5%.
Yeah, it's good if you bought the dip right at the close.
Yeah, no kidding.
Yeah, someone says, believe Tesla has finally moved its headquarters to Texas today. Nice. I've seen that a lot today, so hopefully that's true.
Yeah, I didn't hear that, but that would be cool. Looking at CrowdStrike right now, it's still up around 3.5%. So if you guys are just tuning in, they ended up beating top and bottom line. They beat earnings per share, raised their full year guidance, the quarter four guidance, which is above what the street was estimating as well. So the stock's actually looking pretty good. I think this is still a pretty good area for CrowdStrike, just even going off of the daily chart. I mean, as I mentioned before, 298.48 was their all-time high just a few short weeks ago. We're talking November 10th was the all-time high for CrowdStrike, and it's down 30% from there.
Yeah, I wonder why quite a few tickers have been seeing this.
Yeah,
just this sell-off. I'm curious where all of this ends.
It's a big wall of worry, man. I don't know. I don't really understand it. It's not necessarily that. It just seems like it's a big buyer's strike right now. Like the buying's not really coming in like we have been seeing it. I don't know if it's just revolved around fear or what.
I don't know. Small cap definitely taking the beating. And like you've been talking about this in the past few streams, just these smaller ones just getting completely smoked.
Yeah.
And We saw a bunch of put flow come in for even again IWM today. Looks like we'll be getting the bottom of that horizontal channel. I wouldn't really be worried about anything unless this breaks.
Yeah.
Sorry, my little one's here. So if you see her, hear her. This is why I like stream at night, bedtime. Then kids running around like crazy.
That's all right. But yeah, the IWM actually looks really good here, though, too. As long as it holds this level, support looks pretty good.
This is the IWM for you viewers that don't. I watch the futures. IWM is just the index for this, but also the expected move for the IWM. We're right here. So market makers priced in this move already. Things will get violent if it breaks that 211 mark. That's the one thing I would say. If we do get below 211 this week, that's going to be rough.
Yeah. Without getting too technical, I know I have my own biases as far as continuing to be bullish towards the end of the year. But what are your thoughts? Do you think do you think that we're still intact here? Do you think Santa Claus rally still is a possibility of happening?
Well, Santa Claus rally for me is always like the last 2 weeks of December because it's retail and just institutions are out, and so hopefully we do still see some of that. The only part that was concerning, so we're looking at tech right here. I was completely bullish until today, and it was actually, if we get to a smaller time frame, it looked like some big money wanted to get out because a lot of people think Omicron or the Feds and all that, but the Feds were talking here, they were talking here. There was news that came out on every one of these points, and it kind of looks like somebody, bigger institutions, when they want to get out, either they need an excuse, they need something, or they like to sell big orders that can move the market and come out with an excuse. I was just watching this level, really hoping we'd get to the outside of that, but the buyers did not show up here. That's the only thing that's concerning. I'd really want to see a bounce back. Nothing I'd be too worried about. I mean, I'm only upset because I didn't short today. I was busy looking for a dip buy. It just didn't happen.
Yeah.
But no, I wouldn't be in panic mode. That was my alert to buy the S&P that we hit just a little bit ago.
Yeah, it's interesting. It's interesting that you say that because when we were talking yesterday about obviously Powell, saying what he said to Congress, and then we saw the huge sell-off. It just seems like it's weird timing, right? Because we've been seeing inflationary pockets of inflation in certain areas, but we've also seen it kind of come back. Like it just weird timing, I think, for Powell to be like, oh yeah, we're just going to retire the word transitory, given the fact that we've seen commodities just kind of really tank over the last couple of months, really since September. And really over the summer too, we saw lumber come down, we saw energy, oil come down, steel, all of it at least 20%. So we're still seeing obviously some inflation in certain areas, with wages and that thing, but really from a commodities perspective, it actually has been transitory. So it was interesting to hear him say that, and kind of like how it corresponds to the chart there that you were showing as far as where the tops actually were on it.
Yeah, I think he's actually keeping the same sentiment. I think what he's meaning by, he says he's going to retire the word transitory because everybody seems to be throwing that in his face, kind of just taking it out of context. I think they're just going to be done saying stuff like that.
Right.
The only thing that I thought, so I'm thinking around March we get that correction or pullback. The only thing that's concerning is one, all the other YouTubers are saying it. I know they're never right, so I might walk that back. But him saying we might move things up a notch, we might just move things. The only thing I'd really be worried about is rate hikes and what that does to tech. And tech will be an interesting one to follow just because there are some that are a safe haven. Now, we all know that NASDAQ or QQQ is the top three are Microsoft, Apple, and Amazon. And, everyone's talking about why we're jumping into Apple now because it's considered a safe one. So it'd be interesting to see when rates do rise. Some of those techs are the safe ones. Some of those are find the nearest nerd to buy your shares and give it to them. They're going to be running for the hills.
Yeah.
So that's what will be I think that'll be the one leading the charge on that one.
Yeah, March is an interesting time frame. I was actually thinking it could happen earlier than that. I think once we get through this push, which I think could still very much happen and is still intact, I think seeing all-time highs in the markets could still happen by the end of the year. and maybe carry into January. But I think that's when the turn really starts to take place. I think that once people kind of like grasp onto the fact that, oh shit, we're actually seeing an increase in the taper, that could probably take place around the end of January. So that's, I'm thinking that we could see a correction towards the end of January, which would be far earlier than March.
Yeah.
But that's also like a seasonal thing too. I mean, we saw it last year. Obviously, the year before in 2020 was a little bit of an anomaly, but we saw it in 2019, and this is a little bit more of a cyclical thing where you see a correction around that time frame anyway.
Yeah. Yeah. And everybody's just kind of trained to think that. And almost like what could be going on today, just once one person sells in the dominoes just fall, it becomes its own landslide because stops
Yeah.
start getting sold, people start panicking. They do one of two things when they panic: they bag hold and complain in chats, or they sell all their all their shares.
Yeah, looking right now, the S&P closed just under 5% from its highs, and so I think this will be an interesting point to see where we go from here. Do we settle out, and do we kind of like this is the bottom type of deal, or do we continue selling off? Obviously, it remains to be seen, but it's kind of feels like we're getting close to where the bottom is.
Yeah, I sold the 442 puts, so hopefully we stay above that.
Yeah, yeah,
Except I did that yesterday, so that sucks.
yeah.
I did yesterday.
Uh,
Yesterday at the bottom, but today went a little bit lower.
the expiration today or
No,
Friday.
this Friday. Yeah,
Yeah.
yeah. Let's take advantage
Um,
of
yeah, we take a look at SPY right now. Here's a daily chart for
that.
those of you who are watching, and it actually ended up closing just below that 50-day moving average. So you guys remember at the top of the show, right at 330, it was still sitting at 355. I said that there's potential for this to come down and retest at 452. Now it's just barely below that, and we saw this kind of like fall pretty far below 50-day moving average back in September when we saw all that chop. So it's not to say that 50-day is just the end all be all, but we can look historically over really just even just this year and see how many times this has tested the 50-day moving average and had really nice bounces from that. So that's kind of what I'm expecting to have happen. Obviously doesn't necessarily mean that it is, but we just look at the patterns that we've seen before, and there's reason to believe that it's possible.
Yeah, I think they run it up again. I think they're trending. This is borderline tinfoil hat. I don't know how deep we get into that.
Yeah.
Because I mean, I trade characteristics, so
Right.
I'm looking at that market maker stuff,
Yeah.
and I think, like I said, borderline tinfoil hat. I think they're training everybody to buy the dip because that's what they need somebody to sell it to later. And if you drop it to the 50, if you just keep having these consistent drops like we've seen, it teaches everybody, don't worry, it's fine. Load up, buy the dip, and then one day when that red candle's followed by another red candle, you'll be in trouble and people lose their minds then.
Yeah.
But I think they probably do run it up even more, and I bet SPY looks still the same until I think we will see just moves like this until we do see a big drop.
Yeah, which I don't think we're necessarily due for just yet.
Right.
Probably 22 is probably when that'll end up happening. So I agree with you there.
Yeah, we'll run it up. We got one more drop coming around the 15th to the 18th where we talk about the debt ceiling again.
Yep.
And then hopefully we run it up into January because everything goes up in January. And then we see rate hikes.
Yeah, I think that's when I'm going to start moving into some cash. Is going to be in that mid to late January area. Once we start to see the next move up, which I still think is going to happen. That's probably when I'll get myself into a decent amount of cash for the drop.
Yeah. See, I always keep that stuff in the back of my mind. I think that I think the market is going to correct or actually crash. I'll worry about that when it happens. Imagine worrying about that now and buying short positions, and then you're just screwing yourself because it's just going to keep going up. That leap you bought, the put leap you bought on SPY, it went up and finally came back to at the money at the biggest crash. You end up just stepping on your own feet.
Yeah, it's crazy. I mean, people like to throw the word crash around. It crashed in 2020, obviously. And I had mentioned back in April that we weren't going to see another crash this year. And you wouldn't believe how many people lost their minds because I said something like that. First of all, the stock market's never crashed twice in a row, 2 years in a row. But, in between crashes, we had 2020, obviously. The crash before that was 2008. Crash before that was in 2000. So it wasn't even like these crashes don't happen on the reg. corrections here and there or something obviously that we just kind of work ourselves through. And those are normal, healthy things that have happened. And I think that that's what we're going to see. So before anybody gets their panties in a wad here, it's just corrections are corrections, and getting into some cash makes some sense so you can buy the dip. But that's the whole purpose of me doing it, so I can buy the dip, not because I think there's going to be some crazy ass crash that happens.
Yeah. Yeah, and so we'll just transition to the whole having a plan. You touched on a little bit earlier. I saw a bunch of comments in here like, "Oh, I'm sick. I'm down so much," and I even said some people might just be venting, but uh, that's part of having a plan or planning to
Yeah.
fail. And the part where I think your channel sees more of my investing side. We talk about things that I own, but trading is my job. Like you guys have a job, and then you have your investment account on the side. Like that's also how I do things. So
Right.
I own a bunch of tech. It does not look good right now. I'm in so much Facebook and Amazon and Tesla, and I don't even want to look at the account right now. But I usually sell options contracts against it. But every one of these days, I still sleep like a baby. It's just fine because I'm mindful of my allocation. I think people are forgetting that they're also being trained to buy the dip. The red candle gets a little bit steeper than the one before, and all of a sudden they're losing their minds.
Yeah.
And then I don't know. I just want to put that out there. Just be mindful of your allocation. Like these people saying they're sick because they're down so much. Like at any point in time, regardless of what any YouTuber says, that next candle's green or red. It doesn't matter. Like the sell off, the pump up. Elon could announce a split. He could announce he's leaving Tesla any day. Whether it's likely, that's a different argument, but it could happen any hour of any day.
Yeah, I agree. Elizabeth Shelbourne brought up a comment. And I just wanted to. It just came to me when she had mentioned it. She said, "I'm heavily invested in tech stocks too," which I think there's nothing wrong with, but also make sure that you're in the right tech stocks, because I think as I mentioned before, making sure that you're in tech stocks that are making money, don't have a crazy multiple, and not and that just hasn't gone crazy. Obviously, I mean Apple still. I saw this. I saw that you ended up liking the tweet. So I put this out on Twitter this morning about how Apple has hit all-time highs, but also keep in mind that it has grossly underperformed the market. So this is it's obviously one stock that everybody's like, oh yeah, whatever, it's Apple, but it still has the potential to go crazy. As you mentioned earlier, it's a safe haven for a lot of people to go into when they don't know what to buy, so they just go buy Apple. But then also it's grossly underperformed the market when it has outperformed the market the last 8 out of 10 years. So I still think that there's certainly this catch-up trade that could happen with something like Apple. But to Elizabeth, just to your point, hopefully you're not into any kind of crazy high multiple tech stocks, because I think that those are still going to be a bit troublesome for you. But I think large cap tech is definitely going to be where it's going to be at moving forward too.
Yeah, that's why I think. So we got a buddy that we talked to. Now he's in charge of 14 billion. So he has to talk to HR before he talks to any of my streams. He said he wouldn't be in tech at all. The only reason he's in tech is because they're clients.
Yeah.
But he that's how much they don't like tech coming up. But that's also how bullish they are XLF. So if you're going to hold tech, because even I'm telling you, even I am in tech, and if it's red, I'm selling contracts against it. I'm collecting rent. That is a children's allowance compared to what I'll actually be down if tech gets smoked.
Yeah.
Still obviously being mindful of that. But if you're not in playing that game, then maybe you do want to put some money, like I said, be mindful of allocation. If you're 100% in tech, we toss a little bit more into something like XLF, like energy or financials, and at least, have some kind of airbag or padding if things did get crazy.
Really, value stocks. The value stocks in general, just kind of where to plant some of your money if you're too heavy into tech.
Yeah, and how do I put the hold it? Do I hold my mouse over it? Bring Eric's comment up.
Which one?
Don't buy the dip, buy the rebound.
Where's that? You said Eric. You said Eric.
Yeah. Right. Yeah.
Last one. Oh, okay. Oh, there he is. Yep. Eric Scarl.
Yeah. People love to just buy the dip, and then they'll say it just kept dipping. Like, you can afford to wait for the red candles to stop and then maybe buy a green one. At least you're not the only buyer in there. If you want to just wait for it to base out. When you see things just melting off, hang out a bit. Like, what
Yeah.
are you afraid you're going to get a little bit cheaper? Like, you can wait
Yeah.
for a green candle. You need the bottom penny.
Exactly, exactly. Somebody had brought up a good it says Upstart and Roku are good examples. I hope that you mean good examples of what not to buy in tech, because those are the ones that I'm actually talking about. Companies that aren't making money, that are losing money every quarter, but then um, actually have a high multiple as well. So I actually think that Roku and something like Upstart could still actually continue to sell off. And I'm actually very surprised to see Snowflake still holding its 12% gains right now. It was up as much as 17% after hours. They reported a really big beat on revenue, but man, did they ever miss on earnings per share. So you guys can see this huge correction it had. But let's go take a look at the 1 minute. But these are the stocks that I'm saying that I would actually avoid in general until they actually come back down to a reasonable valuation, because right now they're just ridiculously overvalued. And these are prime examples of stocks that aren't making any money every quarter and have a ridiculous valuation. So I think that those are ones that, in my opinion, I probably stay away from. And if you want to be in tech, getting into the ones that are actually making money, the staple, tried and true FANG stocks are certainly ones that I probably would gravitate to if I was going to be buying more tech.
Yeah, Roku is actually a prime example of everything I just said. If you share my screen right now, you guys should see right where my alert is. Even told my chat today, just got my alert on Roku, not buying it. Gonna go ahead and wait. And it's because
Yeah.
things are just, that's the orange line right here. It's just melting off and looks like that. And so I'm usually known for buying the bright red candle. I'll catch a knife, no problem. But
Yeah.
again, the selling just kept coming, so I never bought. And then look what I would have been had I bought it. I'd just be down. And should it be a surprise to anybody? Because it's just one red candle after the other.
Yeah.
I don't know. Just to touch on that, I hate seeing people, talk about how much they're down, or just they weren't prepared for it. Because you can really only lose your ass if you put it out there.
Right.
That's where I do, like, you guys have your, you guys, what do you call it? A max position.
Yeah.
And then that's it. If that position gets smoked, at least you only lost that, and then that's it. Like, hey, it's down. I'm either going to ride this storm out. Maybe I'll cut it later, but that's kind of it. I'm not going to offer up a whole bunch, a bunch more.
Right. Yeah, exactly. Good stuff, guys. That's going to do it for us. So I'll be back tomorrow. Don, you got some free time tomorrow?
I do. Yeah.
All right.
It's tomorrow's Thursday, right? The comedian
Tomorrow's
coming
Thursday. It's Freddie Day tomorrow. Yeah, so we'll be here tomorrow. If you guys wouldn't mind hitting that like button on your way out the door. Pretty good showing out today. So we got 190 of you. Hopefully you learned something today. Kind of got some insights from us on where we think the market's headed. And obviously we gave our reactions to Snowflake and CrowdStrike. If you missed that, CrowdStrike came in and beat across the board. They crushed earnings. That stock is now up here after hours. It's still pulling back from its highs, but it was up as much as 5%, now only up around 2%. Snowflake is holding its gains so far. We'll see what happens tomorrow, though. It's up around 12%. They missed earnings horribly. They missed earnings per share by like a ton. A loss of 56 cents is what they came in at. The expectation was 6. They lost of 6 cents. But they smashed revenue and then gave upbeat guidance as far as revenue in the quarter that we're in right now. So that's why the stock's up. We'll see if that actually holds up. But guys, thanks so much for tuning in. Again, if you guys want to go check out ownthechaos.com, we put a watch list for you guys every single day, as long as what I think the market might end up doing for that day as well. Just kind of give you overall sentiment, and it helps support the channel and the studio you see behind us. So go to ownthechaos.com and sign up to be a Chaos Crew member today. Don, thanks for your time. Appreciate you. Go find Don at the Don Front Show if you guys are looking to trade options or really just get into day trading. He's your man. And so I appreciate you coming on, my man.
Of course. I'll be on tomorrow.
All right. Sounds good. We'll see you guys.
Have a good one.